What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for AT&T Incorporated with the ticker symbol T. Remember that if you want a chart analysis guaranteed to be done, please read the description below. Before we begin, please take a second to give the video a like and subscribe for more chart analysis. I appreciate all those who have already subscribed and liked my videos. Just a reminder that this video is for entertainment purposes only and does not constitute any financial advice. We'll start at the technical analysis by going over what I see in the daily chart and potential price targets. Then we'll take a quick look on the weekly chart to wrap it all up. So the reason I'm doing this stock is because I was looking at Verizon Wireless a few weeks back, and then another viewer commented that the AT&T stock is also in the same boat as Verizon, which is a downtrend and is trending lower. So it just looks more appealing to me, this company, now that it's becoming more and more cheaper by the day. So that's why I want to take a look at it, and we can go ahead and compare it to the Verizon stock and see which one's a better buy. But let's go ahead and start this up by looking at the daily chart. And as you can see here, ever since this May sell-off, we've been in this very weak downtrend, going lower and lower. The prices are making lower lows and lower highs. It's below the EMA, and the EMA is acting as resistance. Currently, it looks like the trend is speeding up, so it looks like it's trying to go to this target much quicker now. So that could be a sign that the downtrend may be over soon, this bear market, because we've been going down for quite a long time. Let me show you guys the channel that looks like prices are respecting. So every time we come up to the highs of this channel, we get rejected. And then previously it was right here, the lows of the channel, but now we overshot it, and it looks like it's staying below the EMA. So it looks like it could be a two-tier channel. So this also fits the chart pretty nicely right here, because now the midline is acting as both support and resistance. So this is a very nice fitting channel, so that's why I deem it to be accurate. So it looks like we're at the bottom side of the channel, so we could see a pullback in the future, maybe back all the way up to that $26 or $26 or $27 level right here, because this is where the breakout was. So we don't have to, because it's looks like the trend is picking up lower, so we don't really have to make a pullback that large. But maybe I do expect a slight pullback at the very least, just because it looks like we're at the bottom of the side of the channel and we're a little far from the EMA. So maybe it wants to make a two-legged correction up. I don't know how far that can go, but it looks like we can expect a slight correction in the future. However, I do expect the prices to continue lower. If I just zoom out on the chart, and I'll show you guys where prices can be going next. So I'm going to have to do a measured move. So if I do a measured move from this swing down, and then prices went sideways, or a slight little two-legged correction, if you could see it, then this would be the second leg down. If I move it right there, let me just zoom out on the chart, and I'll put a horizontal line at the target that it looks like prices want to reach, and it's right at that $20.40 level. So I'm pretty sure that's pretty low for most of you guys, but I wouldn't be surprised that AT&T would reach it, just because it looks like it wants to drop down to this level. It looks very weak, so it could continue much lower than right now. So that's why I'm personally not buying. I think Verizon and these telecommunication stocks can go a little bit lower, and then it might be a good buy. We'll see. But as of right now, looks like the prices are telling me that the trend is going to continue lower. So let's go and wrap this up on the weekly chart. So here we have the weekly chart for AT&T, and as you can see here, we've been pretty much in a range for 2 decades, so pretty much 20 years of just sideways movement. There are trends inside the range, but most of the price action is just sideways. So it looks like the lows of the range are right at the $21 level, and looks like the highs are the $42, $43 level. Every time we come up to the highs, or this $42, $43 level, we get rejected, and it sends prices back down to the lows. And every time we get a bounce from this $21 or $20 level, it sends it back up to the highs. So just based off this previous price action and what it looks like wants to do next, it looks like it wants to go back to the lows of the range, because that's how price action moves inside of this pattern. It goes up and down. So it looks like it just came off from the highs, just like what happened here, and we're probably going to bounce on the lows. We don't have to, but that's where it could be going next, and most likely. So it looks like the prices want to go to the bottom of the range, and then from there we might see a bounce. It's very appealing because that's where the bottom of the 2009 or 08, 09 crash was, and even the dot-com bubble looks like a little bit after the 03 level, 02, 03 level. So there's two crashes right at this level that made it the bottom of the market, and there was a bull trend after. So that's why I'm expecting prices to reach this $20 to $21 level before seeing a reversal. The measured move also lines up right at that $20 target, and there's also another measured move on the weekly chart, a very large one. As you can see, if I do this leg right here, for the daily chart I use this one right here, 1, 2, and now I'm going to do this one right here for the weekly chart. And if I drag it up to the top of that correction, this measured move is pointing at the 2250 level, and my first one is right at like 22, right at the 2050 level. So there's some confluence here, and also this range is in effect, so that's where I see prices continuing lower and to these targets. So that's just pretty much my analysis for AT&T. These telecommunication stocks are dividend paying stocks, so they're not a growth stock, so they go range bound for quite a long time. But if you buy at the right time at the bottom of the markets, you can get the dividend and a decent size gain if you time it correctly and you know what you're doing. So these are very appealing and kind of a safe bet, because most people will pay their phone bills. A phone is a very great tool in this digital age, and most people, you can't do much without one. So that's why I like these companies. However, I think Verizon is just a better bet, just because I believe they're bigger and they have that 5G rolling out that Apple's supporting, and so it looks like Verizon might be a better buy. But that's just my opinion. If you look at the fundamentals, it's not really showing much on this graph, but it looks like last year AT&T lost some money in the net income, which is kind of weird, and the revenue was a little lower. So it looks like the price action is accounting for that, and it looks like maybe they might turn around this year or next year. So we're coming to a crucial point in the market. So thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.